Hello viewers, welcome back. We are now looking at the DCF valuation modeling, and this is the course that we are starting. We said in the first video that this is one of the methods that are recently used by most of those within the finance profession today. What we are going to look at chapter by chapter in this, we are going to look at the DCF model theory, and we are also going to have different videos in that DCF model theory. We are going to look at the theoretical aspects, the small theoretical things that we can have, but they are not all that 100% theoretical. So we shall look at that as our chapter number 1, and then we look at the other chapters as we progress. So we are going to be having different videos in these chapters. So the second chapter will be about the compact DCF model, and there we shall be starting the practical bit of that course. So those are the things that we are going to basically focus on as far as the course is concerned. So we shall look at some of those things, and we shall see how we can be able to adjust as we move forward in the course. So the first chapter, we said it is DCF model theory, and we are going to look at the course introduction. So that's what we are going to look at in brief. My name is CPA Charles Cafe, and I'm a certified financial modeling and valuation analyst. So welcome to our YouTube channel, where we are engaging into different aspects as far as finance and accounting are concerned. So we are going to talk about the DCF valuation modeling. That's our course for today. DCF modeling is one of the most common and sound techniques, and what we are going to look at is how we can develop a DCF model. We will forecast the company's cash flows forward in the process called compounding, and we will also discount them back to their present worth. In other words, we shall discount them back to their present value, but we are going to be so careful to avoid some of the most common mistakes that people get into. But all the time we go through these tutorials, we will be building the highest possible standards of the industry. In other words, what we are focusing on by building the DCF model, we want to build it in a sense that it is going to be of a more professional and standard. In other words, it's supposed to be up to the standards of the industry. So in order to benchmark to the industrial standards, we will be referring to some of the model guidelines. Those model guidelines, we have a PDF, and it is within our Telegram channel. So we encourage you guys to join, be part of that Telegram channel, subscribe to the channel, so that you can actually be able to receive some of these information, some of the notifications as and when we've uploaded certain things, because those are actually mainly, they are not focusing on one course, they are focusing on things that you need as a finance and accounting profession. In other words, our area of focus is whatever that we can within the accounting and finance docket, we shall deliver to you. So that's our main focus, as well as the things that we try to accomplish. So that financial modeling document is the one, you can download it, it's free. You can download it because it will be the one that will help you to understand the best standards for financial modeling. So as I said, you can access that document from our Telegram channel. The link is within our YouTube channel in the About To section. So you can check it, join and be part of it so that you can be able to download some of the downloadable documents that we have in there so that you can be able to follow along within this when you are going through these practical aspects. So that's the end of the first video within our first chapter of DCF model theory. So we'll see you in the next video where we are going to look at the important dates. What are the dates that we need to look at when we are doing our modeling? So let's see in the next video as we are talking about the important dates that we need to have in place.